The biggest energy deal in history could be the catalyst that leads to the greenback losing its place as the world's reserve currency. That's the opinion of a range of economists, commenting on Russia and China's $400 billion natural gas agreement. And James G. Ricard, Senior Managing Director at Tangent Capital, joins us now live for more. Mr. Ricard, welcome to RT. Very nice to see you here. Obviously, the world is still relying mostly on the dollar while signing contracts and so on. And Russia and China are no exception here. Obviously, the price of the gas deal was announced in dollars as well. Clearly, it can't be replaced anytime soon. What do you think? I mean, if Russia and China, for instance, start paying each other in yuans and dollars, it's not going to work out anytime soon without the involvement of the dollar.
Well, it's important to distinguish between a reserve currency and a trade currency. Deals between Russia and China, or China and Brazil, or Russia and Central Asia, any of those bilateral trading relationships, it's fine to have the ruble or the yuan, let's say, as a trading currency, as long as the partners are willing to accept it and you have the banking mechanisms to take or receive payment. But a reserve currency is different. To be a reserve currency, you need a large pool of investable assets. The reserves are just a country's savings account. So if you have a trade surplus or you have direct foreign investment, you accumulate reserves and you have to invest them in something. For that, you need a bond market. And neither Russia nor China has a big enough bond market to serve as a reserve currency. There are very few Chinese bonds and not that many Russian government bonds. Russia actually has very little debt, for example. So they're not ready to be a reserve currency anytime soon. But there is something out there that could replace the dollar. It's not the Russian ruble or the Chinese yuan. It's the IMF special drawing right, or the SDR. So I think the next time we have a liquidity crisis in the world, it's going to be bigger than the ability of central banks to deal with it. The IMF will have to basically bail out the world by printing SDRs. At that point, you may see the SDR, the special drawing right, emerge as a new global reserve currency.
Okay. What international factors pressure the dollar down?
Well, there are three big ones right now. I would say Russia, China, and Saudi Arabia. You know, since the 1970s, Saudi Arabia has been the leader in what's called the petrodollar. And it basically means that Saudi Arabia, and by extension OPEC, price oil in dollars. So the world market in oil is in dollars. There's no reason why that has to be true. Today, oil could be in euros, it could be in yen, Swiss francs, oil could be in gold. But Saudi Arabia has always supported the idea that oil would be in dollars. Now, even if you don't want dollars, everyone needs oil, and if you need dollars to pay for the oil, then you have to have dollars. And that's an important prop under the dollar. Russia, of course, is a major natural resource exporter, and they have priced their exports in dollars as well. But Russia is now engaged in financial war with the United States around the issues in Crimea and Ukraine. And over to China, China has $3 trillion in dollars, but they're buying gold as fast as they can. China worries that the U.S. is going to devalue the dollar through inflation, and so they want to have a hedge. If the dollar goes down, the gold will go up. So, you know, China getting gold, Saudi Arabia backing away from the dollar, the U.S. and Russia confronting each other. Three of the legs of the stool, Russia, China, and Saudi Arabia, are all being pulled out from under the dollar. So this is very bad news for the dollar.
Obviously, the U.S. Foreign debt is tremendous, and it keeps growing. Yeah, we don't see companies and states turning their back on the American economy and the dollar in particular. Why is that?
Well, of course, as you mentioned at the top, in the short run, there is nowhere else to go. That is true. But these things, you know, start out slowly, and then they can, you know, just like an avalanche or any other collapse, they can gain momentum, and confidence can be lost very quickly. Now, the problem is, you're exactly right. The United States has $17 trillion of debt. That's government debt. That's not counting all the unfunded liabilities for our Social Security and retirement, Medicare, Medicaid, student loans, Fannie Mae, Freddie Mac, all the guarantees. I mean, that amount is actually in the hundreds of trillions of dollars. There's no way, there's no combination of growth and taxes in the United States that can pay that debt. The only way you can pay it off is with inflation. Now, the Fed's trying to get inflation, but interestingly, because economic growth is so weak, because we're in a depression, the Fed's not actually getting much inflation. What they are getting are asset bubbles in stocks and housing, and then, of course, those bubbles will pop at some point. So, but the inflation's not here yet, but it is coming, and that's really the only way the U.S. can pay its debt. But that's one more thing that would drive other countries away from the dollar. Why would you hold dollars if the U.S. is just going to inflate away the value?
Mr. Ricard, thank you very much indeed for speaking to us. We appreciate it.
You might know that China owns a significant portion of the United States debt, some $1.3 trillion worth. But our national debt is not the only place where China is picking up the tab. The Chinese government and private financiers have been sinking more and more money into America's economy. And those investments don't seem to be slowing. So how much of the U.S. does China own? With the recent boom in Chinese credit availability, public and private Chinese investors have been seeking a safe, profitable harbor for their newfound spending ability. Meanwhile, the U.S. dollar has been losing value in comparison to the Chinese yuan. Coupled with the creeping housing bubble, the government is desperate to control. Experts say there has never been a better time for China to invest in America. In recent years, Chinese nationals have been buying up real estate around the country at increasingly higher prices than other foreign investors, especially in major urban areas like Manhattan, Los Angeles, and the San Francisco Bay Area. In February 2015, a Chinese insurer agreed to buy a Manhattan hotel for $230 million. According to reports, that price tag makes it the most highly valued hotel in the U.S., with each room costing about $2 million. Last year alone, Chinese buyers spent $22 billion in the housing market, a nearly two-thirds increase from 2012. Chinese companies are also buying existing businesses across the U.S. Chinese conglomerate, the Shineway Group, purchased the largest pork producer in the United States for $4.7 billion. The acquisition made the privately owned Chinese meat company a major employer in some rural parts of the U.S. In North Carolina, 1 in 10 hog farms are now owned by the Chinese pork producer. Similar deals have given China unprecedented access to America's workforce. In 2012, Chinese President Xi Jinping and U.S. Vice President Joe Biden agreed to support Chinese construction companies in rebuilding America's infrastructure. For example, the New Bay Bridge connecting Oakland and San Francisco was built almost entirely in Shanghai before being shipped to the West Coast. Other projects, like an expansive New York subway refurbishment, have also been outsourced to China Construction America Incorporated, which has invested over $2 billion of its own funds in American infrastructure. Overall, since 2005, China has sunk more than $70 billion into U.S. housing, technology, finance, and energy.
In the reality of the global economic slowdown, money still makes the world go round. In the circles of vice and lust, political maneuvering and corruption. Is money the source of all evil, or just those who control it? Are banks there to keep the people's wealth, or to steal it? Can any government be called honest? Who runs the economic and political scenes?
Well, there is a terrible currency problem. We're on the verge of a currency war. The Federal Reserve is printing dollars like there's no tomorrow, and if they keep going, the rest of the world is not going to accept them. As it is, the BRICS countries, Brazil, Russia, India, China, and South Africa, have decided that they're going to finance the trade among these countries with offsets and pay for the difference in gold. And
but
this
how is that connected
the right
with the
move
shutdown,
for them,
though?
because the U.S. Congress has been fighting with the presidency because the presidency has been in total contempt, and the highest legal officer of the United States government has also been in contempt of Congress in fighting this international corruption that is ruining the dollar as an international reserve currency.
But, you know, economists have been predicting the dollar will fall ever since the crisis in 2008. But the government has managed to keep it afloat.
Well, not for long. If you look at what's going on in the gold and other precious metals markets, silver as well, we're headed towards something called permanent gold backwardation. That means that there's a loss in confidence in the fiat currencies that are issued by those private banks. They like to consider themselves as public banks, but they're really owned by private entities. And these currencies are about to crash because they're valueless. That's what always happens to paper currencies that aren't backed by assets.
Mm-hmm. But, well, like you've mentioned, gold backwardation. Gold is often chanted as perfectly safe investment, an alternative to the dollar even. But how come the price of gold is falling?
Because of market manipulation. But that can only continue for so long because the central banks are running out of gold and the rest of the world are lining up to buy them. If you want to buy gold today, you have to pay a premium. What they're offering in the future is called a naked short. They don't have the gold to back those offers. That's illegal what they're doing.
If you go back in history, 100 years ago, Britain was the major trading nation of the world and the pound sterling was the major currency. That was soon overtaken by the dollar as the US became the dominant economy in the world in terms of trade flows and so on. China will take that position.
How do the foreign banks think of the RMB internationalization? Do they welcome this process?
Absolutely, because the internationalization of the RMB is effectively just evidence of greater trade flows, and you know, we were founded 148 years ago on the back of trade and investment flows largely between Europe and China. So anything that promotes international trade, anything that creates volume through the financial markets is good for the financial system, and greater diversification in terms of investment opportunities and reserve management that comes from the emergence of another very strong liquid currency is good for the financial markets, good for international trade, good for the global economy.
Look at this billboard this was taken in Thailand, the Bangkok airport. And you can see it says RMB, which is the renminbi or the Chinese yuan, the new choice, and the world currency. Look at that, the yuan. They're coming out there and saying right there on this billboard that they have, or they are anticipating having, the world reserve currency. So
the City of London is already responsible for more than half of renminbi payments outside of China. The deal at the Bank of England Monday is yet another step towards cementing the UK capital as the Western hub for financing and trade in the Chinese currency.
I think London is really just looking to cement that further and further. So in many ways, London is looking to stamp its own authority and really declaring its own independence from the rest of the world. And that's another sign that this deal, in many ways, is going to certify that.
The signing of the Memorandum of Understanding between the Chinese and UK central banks will be quickly followed by the appointment of a London clearing bank for renminbi, an important development in an apparently growing bond between the two banking systems. The breakthrough for the UK came during George Osborne, Britain's Chancellor of the Exchequer's visit to China last year, when a 3-year currency swap arrangement worth around $35 billion was agreed. For China, London offers a developed marketplace with comprehensive controls.
London already has the infrastructure, which is why the Chinese authorities were drawn to London, because it already has a base. It's been working with Hong Kong to settle yuan trades offshore, and this is for offshore trading.
There are no firm figures for the extra trade this renminbi deal will bring the City of London, but here at the British Parliament, they'll be very much seeing it as a vote of confidence in the British government, as much as it is in Britain's financial centre. Richard Bestick, CCTV, the Houses of Parliament, London.
In my view, the dollar is about to become dethroned as the world's de facto currency, basically. I'll just tell you how I come to that conclusion so quickly. The new president of China, his name is Xi Jinping. His first visit on the day of his becoming president was at his request to meet with Mr. Putin. And he immediately made a deal with Mr. Putin to get all the oil that he needs, which he can buy in renminbi. Now, the big part of the US dollar being the world's reserve currency is that at the time that Nixon gave up the gold standard, he had Henry Kissinger as his advisor. And Dr. Kissinger very, very brilliantly convinced the Saudis that they must sell their oil in US dollars. And that's the way the US dollar became the reserve currency of the world, because everybody needed oil. The only oil that was available in those days, we didn't have shale. We had the shale. We didn't have the brilliance in how to use it. But everybody needed oil, and they had to buy it with US dollars. And that's how the dollar got to where it is today. It's about to become dethroned as the world's de facto currency. The closing words that the reporters reported from Xi Jinping and Mr. Putin was shaking hands, and we have an international partnership that is very important. In 1929, the supply of paper money was limited because it was backed by silver. Our current dollar, U.S., is backed by nothing. So people would use the dollar because they could turn it in and get silver. The Chinese have 3.5 trillion U.S. dollars, and they're spending these dollars as quickly as they can. And it will not be long before the rest of us in the world and the U.S. will be thinking likewise. I do, as we buy things to protect our future purchase power. In the 30s, everyone wanted U.S. dollars. Today, everyone wants to get rid of them. Buying hard assets is what you'll hear from many people in the business that I'm in. We're headed to a period of stagflation, maybe serious inflation, but stagflation for sure. And the United States will be losing the privilege of being able to print at its will of the world's reserve currency, a period that will be very inflationary. And I can tell you that before that happens, it is likely going to become quite ugly. We're living through a very uncertain atmosphere, and it's all related to politics and money. And interest rates and confidence turns overnight. Investors are not rational. There's no time when the truth takes place. China is the world's largest debt holder. Japan is the second largest debt holder of U.S. money, and they have to act on their own interest, and they are. 1.6% interest rates are not deserved by the United States. The problem is the United States can't afford to pay anymore. So they don't deserve their bond rating, and they're probably going to lose it. Discretionary spending in the United States is 36% of government spending. There's an excellent chance that the U.S. will soon be determined to be in a recession once again. I believe they already are. It's highly likely that they will be soon determined to be in a recession. 75% of their new jobs are low-wage, part-time, and often government-inspired. Unemployment is understated. Real unemployment is probably closer to 15%. Even Walmart is suffering. The end result of higher government spending, the full employment policy, and the U.S. Federal Reserve's obsession with interest rates has been a roller coaster ride along a rising path, and a rising path of inflation, which from time to time is brought under check. But each time it rises again, and after a check has been rising on a fraction of income is received along with the government tax receipts. Since time immemorial, sovereign kings, emperors, or elected parliamentarians of any sort have used magic money to acquire things or wage wars. And it just doesn't work. I'll quote Jim Grant, and I'll close. You'll rifle through history books in vain to find another monetary era like this one. A reserve currency made of paper, nothing else, is one novelty. A pan-European currency, also weightless, is a second. Chronic and immense imbalancing. A deepening deficit in America is a third.
New York Stock Exchange. It's a cold, breezy day on Wall Street as markets await the Federal Reserve's announcement for QE4. Futures are up significantly. The Dow Jones just breached its 2008 high of 14,164. Gold just hit an all-time high of 2,900. Silver just breached $100 per ounce. The dollar index is holding at 53. With official unemployment at 16.3%, there's a nervous feeling on Wall Street that if this doesn't work, the world could implode into a depression that will last for the remainder of the decade. 8:19 a.m., Beijing. Chinese officials announced that they can no longer allow Washington to devalue their holdings. After making their concerns private, China accepts that Washington will never stop paying its debts with inflated currency. China makes an official statement from Beijing, quote, "We have made our concerns known privately for some time. With QE4 about to be announced today, China will have no choice but to stop purchasing U.S. treasuries. We have allowed Washington to try to work through their imbalances for 4 years. But with global inflation and U.S. consumers rapidly shrinking as a percentage of global GDP, we feel that a Western recovery is unlikely until they reform their entitlement programs." 8:45 a.m. New York Stock Exchange. Upon hearing the statement from China, Dow futures have a sharp reversal and begin to drop. Gold leaps past $3,000 per ounce, up $150 per ounce in the last 26 minutes. CNBC awaits a statement from the White House. 8:50 a.m. Washington, D.C. The president makes an official statement to calm investors' fears. He tells Americans that he has spoken with several G20 leaders. They have assured him that they will continue to increase their purchase of treasuries and believe that a strong U.S. economy is the only thing that will bring back global prosperity. He has also spoken to Chairman Bernanke, who assures him that a strong dollar will be the result of QE4. The president also reminds Americans that his recent New Deal recovery programs that he passed through executive order will increase the likelihood of a lasting recovery. He also notes that Beijing, since 2009, has slowly been reducing their holdings, so the impact will be minimal. 9:51 a.m. New York. Dow futures fall 850 points in the first 20 minutes of trading. Markets are halted for 1 hour by the authorities. 10 a.m. Main Street, America. The news about the stock market in China has now spread. A panic begins to set in and unprepared Americans rush to the grocery store. In an attempt to purchase food and water, Americans that didn't know what was going on are alerted by all of the news stories and panic buying. Within 50 minutes, there is a nationwide rush to the stores. Empty store shelves in America become a reality. 10:52 a.m. New York. Markets reopen and the Dow Jones resumes its collapse. Investors around the world join the sell-off in bonds and stocks and begin to purchase commodities. Unlike the panic of 2008, this time commodities are seen as the only safe haven from a dollar crisis. 11:30 a.m. New York. The Dow falls 1,700 points since reopening. Trading is halted for at least 2 hours. The Federal Reserve injects $200 billion into the markets and announces that QE4 will be delayed until further notice. Congress is called back to D.C. for an emergency joint session. Some members of Congress are saying that they consider China's statement a financial attack. 12 p.m. Main Street, America. Several cities begin to see civil unrest after grocery stores are forced to close. Traffic in the streets and violence break out. The president puts the National Guard on alert for a possible deployment onto U.S. streets if things don't get under control soon. Several news agencies are reporting injuries at grocery chains and call for the authorities to do something before it gets worse. 12:15 p.m. Toronto, Canada. George Soros tells CNBC that a run on treasuries is imminent and that there is nothing the government can do to stop it. He says it is unfortunate that a controlled decline of the dollar was not coordinated better over the years. Today really could have been avoided if not for the Tea Party politicians who demanded fiscal responsibility and a constitutional government. 3 p.m. Gold closes at $11.53 for the day at $4,053 per ounce. Silver closes at $173 per ounce. The president announces that due to civil unrest in some areas of the country, U.S. stock markets will remain closed for the rest of the day. With the exception of mining and other inflation-related stocks, the majority of U.S. stocks are down significantly due to the sell-off and flight to safety in commodities. The Federal Reserve announces that it will begin to purchase U.S. treasuries and stocks in order to stabilize the markets. But this only feeds investors' fears of a full-blown treasury run and collapse of the dollar. 6 p.m. Asia. Asian markets begin a massive sell-off. Dollar collapse rumors begin to take hold of the markets. CNBC Asia looks into a possible COMEX default and complete breakdown in the U.S. economy. Gold spikes in Asia, up 17.50 in the first complete hour of trading. Gold is now at 58.03. 7 p.m. Gold and silver bullion dealers across the world have suspended all sales due to no inventory. A COMEX default is now expected. Several central bank representatives propose a freeze on currency markets and a fixed devaluation of the U.S. dollar in order to calm investors. 7:30 p.m. the United States. The sun sets on America. In the last 12 hours, the world has changed. Americans are glued to their televisions, taking a crash course on a debauched currency. Smoke from fires in the cities have put a dark cloud over the nation. 7:45, the Federal Reserve. The Federal Reserve announces it will inject $1.5 trillion into the markets in order to stop any further decline in stocks. 7:55 p.m., OPEC. The final nail in the coffin. OPEC nations halt oil trades in U.S. dollars until further notice. They will only accept euros, renminbi, or gold. 7:59 p.m. The Federal Reserve's announcement to inject $1.5 trillion into the markets causes a sharp reversal in overseas markets. Stocks begin to rally even as Main Street melts down.